Hello, everyone, and welcome to Wednesday morning. It's Stephen Whiteside here from theuptrend.com. In the pre-market this morning, we've got stock index futures and commodities trading above fair value. We do have some major numbers coming out again at 8:30 this morning, and that's the CPI numbers. Also have the start of earnings season, and we've got a bunch of financials coming out with earnings this morning. So any of those numbers could help change the direction of the market. Now, the S&P 500 is currently oversold, but not dramatically. A lot of people are talking about a potential head and shoulders here. There's the head from early December. You've got a left shoulder, a right shoulder, and so it wouldn't be surprising if we continue to move lower from here. Now, we talked about the fact that we filled the election gap, and so far that's holding the market up. A lot of the market has passed through that open gap from early November a long time ago, and it's the S&P 500 and the Nasdaq that are still holding things up. Now, the story right now is lower highs and lower lows. So even if we get a bounce here, we've made a series of lower highs and lower lows. And what could happen next is we could move up for a couple of days and then head back down, and the pattern would continue. Now, for the pattern to change, we need several things to possibly happen. First of all, we want the VIX to start coming back down and generate a sell signal. That would be something good to see. We'd also like to see the US dollar pull back. Now, you can see where the US dollar started to move up in early December. I'll just leave my mouse right there. At that point, we had bond yields and bonds change direction. So bonds started to sell off, bond yields started to move up. And you can see at that point, that's when the Dow started to sell off and the Russell 2000. So the Magnificent Seven stocks held part of the market up, but did not hold the whole market up. And you can see there's the open gap from the election on the Russell 2000, and we filled that and traded right through it fairly quickly. So that gap did not hold the Russell 2000 up. Now here's the NASDAQ composite. We were talking about the 20,000 level, and we traded just above it, but did not break away from it. So here we are coming down two lines. And you can see we still haven't filled the election gap just yet. And that's also true on the NASDAQ 100, which, of course, the big cap stocks in the Magnificent Seven have much more weighting. And then if we look at the Magnificent Seven stocks themselves in the ETF, you can see we're nowhere near filling that gap. So you can see the difference in what those seven stocks make compared to the NASDAQ composite and the NASDAQ itself. Now, those seven stocks were all actually down yesterday. And of course, we have 9 stocks in our list, but Apple closed lower yesterday. Amazon closed lower yesterday. Broadcom closed lower. We had a lower close for Alphabet. We're back on a new sell signal for Meta. Microsoft made a new low for this move on Tuesday. We had Nvidia close lower on the day. Didn't make a new low on Tuesday. Then we had Shopify close lower on both sides of the border, and we had Tesla close lower after trading up through the upper channel line. So somebody wanted to buy Tesla yesterday, but at the end of the day, it closed lower. Now, looking at the Canadian market, we're trying to hold support in a lot of areas here. It's hard to find the election gap that you see in a lot of U.S. charts. There are a couple of areas where you will see it, but for the most part, it's hard to find. Looking at the TSX, we came down to support. We actually put in a higher low there, and then we put in a lower high. So looking to see if this pattern changes at all. There's the TSX 60 coming back down to support. We've got mid caps, small caps, and micro caps. And the micro caps, of course, got held in check by the 625 level once again. We've come down, filled a gap, and we're looking to see which way we want to go next. Looking at individual sectors, the energy sector has had a couple of rough days here. We are trying to break through resistance and the highs from back in November. Of course, recent news has caused a slight divergence between Canadian energy stocks and U.S. energy stocks, but we're still on a buy signal here. There's financials coming down to support, and you can see over here, there's the election gap. You can actually see it on this chart. And then looking at the banks themselves, again, we're trying to hold support here. And then looking at the gold sector, it's on a buy signal right now, but looking pretty bearish, especially compared to the price of gold. We'll look at that in a couple of minutes. Industrials are down at what has acted as major area of support back in October, November, and December. And here we are trying to decide which way we're going to go next. Of course, if Trump puts tariffs on Canadian goods, the industrial sector is going to be hit very hard. Then looking at Infotech, and there's certainly an election gap over here. We're getting down pretty close to it at the moment. Then looking at real estate's in the doghouse on both sides of the border. Then looking at the telecom sector, it's also in the doghouse right now. We're trying to hold 130, 125. So far, we've been able to hold that this week. Let's finish off this morning's presentation taking a look at the world of commodities. And we had a slight pullback in crude oil on Tuesday, while gasoline and natural gas closed slightly higher. Looking at Canadian energy stocks, they were up slightly on the day after dipping in the channel. The most actively traded Canadian energy stock was Suncor, up slightly on the day. Then looking at U.S. energy stocks, they were up over 1%. Now, oddly enough, the most actively traded energy stock in the U.S. yesterday was Baytex, and it actually closed down on the day just by 2 cents. Then Transocean was the next most actively traded energy-related stock on Tuesday. Looking at copper moved up yesterday. Copper stocks also moved up, but still not trending. Then we've got the GLD closing higher yesterday. The GLD still looking pretty bullish here. We held the 100-day moving average several times. We're currently trading above the 50-day, trying to break out to higher highs here. Unlike gold stocks themselves, there's the GDX, the XGD. We've got junior gold miners. They're all up on the day, but certainly there's not a major trend happening at the moment. When we look at the flypaper channel for the GDX, you can see we're under the flypaper channel right now. Unlike gold, which is using the flypaper channel as support, the flypaper channel for gold stocks is currently acting as resistance. And then looking at silver's trading from underneath the flypaper channel. And silver miners and junior silver miners are definitely not in favor at the moment. Okay, folks, that is all for this morning's presentation. As I mentioned, we may get an oversold bounce here that could last a couple of days. The pattern remains lower highs and lower lows, and we may not see that pattern change anytime soon unless some other things happen, like the VIX starting to pull back, like the US dollar index changing directions, and somebody out there buy a bond. I think I saw somebody on the street corner yesterday selling bonds. At some point, the market's going to want to come in and buy those bonds and pull bond yields back. If that were to happen, that could certainly help fuel a rally in the stock market, but we're not seeing any evidence of that on Wednesday morning. Have a great day. Next time you'll hear my voice is on Thursday morning.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.